Welcome, it's the Close the Deal show. I'm your host, formerly incarcerated Terrence McCray. Every week we bring you business information, tips, and insights from entrepreneurs, business professionals, and inspired individuals from the San Francisco Bay Area and beyond. The Close the Deal show also features public announcements, Entrepreneur Week, and small business owners. And if you're looking for strategies to help you in business to educate the public, then you're in the right place. Once again, thank you all for joining the Close the Deal show. And today we're going to talk about life insurance strategy from an expert by the name of Shelia Tyson. The reason being is, why is life insurance important? Reasons one is because it pays off debt that you leave behind that would be a burden to your family after you are deceased. So why not get it from an expert how to deal with such matters? So ladies and gentlemen of the Close the Deal show, please welcome Shelia Tyson. How you doing, Shelia?
Thank you. Happy to be here.
Oh, we are definitely happy to have you here. Um, One of the things that I find interesting is how we meet people. And it was a blessing that I was able to meet you on LinkedIn and learn more about what it is you do professionally and how you're making a difference, not only in the community of Vallejo, but how you're expanding and reaching out all throughout the entire Bay Area in your particular profession. So I have to ask you, what is the difference between a captive life insurance agent and an independent agent?
Okay, good question. A captive agent is an agent that works primarily for one company. That's not bad, but they work for one company. Myself, I'm an independent agent, so I am able to shop for the best possible policy for my client.
And how do you do that?
Well, I only represent highly rated insurance companies. So when I sit down with my client, I evaluate their situation by interviewing them, and then that lets me know what company to place them with.
So, when you say you work with only highly rated companies, are there a lot of companies out there that are not highly rated?
Well, some are rated highly than others.
Okay. So, what is the difference between a term permanent policy?
Okay, a term policy is at a certain length of time, certain years, it's going to terminate. A permanent policy is as long as you pay the premiums, it's going to last until age 100, in some case 105. Now, all agents have their specialties that they like to do. Term policy for people over 50 years old, I personally don't like to sell them a term policy because I know at the end of the term they're going to be older and might have some health challenges. So it's either going to be very expensive for them or they just going to be denied. I'm now coming into a lot of people in their 60s and 70s with term policies that if they had to invest the difference, then it would be a difference in their life. But they did not invest the difference. And so now the policy is terminating and they are older and they have health challenges. So now instead of having $350,000 or some cash in a policy, I have to put them in what we call a little final expense burial policy, and usually those are between 10 to 25,000, sometimes no more than 35,000.
Could you explain what the investment aspect of a policy is?
Well, when you say investment, you mean cash value?
Correct.
Okay, whole life policy or cash value policy. And some people teach against whole life policy. They call it trash cash. I don't teach against any policy because I'm of the mindset that the policy that's enforced at the time of need or the one that you could use at the time, whether it be a term, modified, or whatever, that's a good policy.
Okay, so when you say term and you say policies, like what type of barriers will one face for his or she policy to be terminated?
Well, at the end of the term. So if you have a 5-year term policy, it's going to end at the term unless it's renewable, which I hope all policy people look at. It'll be renewable at the end of 5 years or convertible to a whole life policy. A lot of people don't understand that too. If you have a term policy, make sure it's convertible. At some point, you could convert it to a whole life policy.
Okay, what is a mortgage protection insurance and why is it important?
Okay, so let's just back up here. A lot of these terms, mortgage protection, final expense, cancer policies, all these policies, they are life insurance policy. If the person talking to you, asking you health questions, and have a license by the state of California, is a life insurance policy. Now, the reason why mortgage protection, in my opinion, is important for people to have, and I say this all the time, if you have a mortgage and it takes two people and it's, let's say it's 500,000 and the husband is the breadwinner. Sometimes I sit down with people and they say, well, we don't need any more insurance. My husband have $500,000 worth of mortgage, but they have $100,000 worth of life insurance. I tell them, do the math. If he dies tonight, you're going to have to move.
Why is that?
Because you're not going to have enough money to sustain the lifestyle that you was already struggling to keep up with.
Okay.
$100,000, you can spend that in a year. You have a mortgage, you have some car notes, you have children in private school. So you need to have more life insurance. What I'm trying to educate, especially our people, on is that life insurance is not a liability. It's an asset.
In what way?
Well, it's an asset. Some of the greatest wealth is transferred for us at the time of death. I'm trying to even change that to let people know that, and there again, why I'm a promoter of cash policies. There's cash inside of policies, but here's also the wife or whoever the husband, if the breadwinner is taken, you have choices, you have some money left to you. You have some money that left that could help you pay the mortgage, maybe 1 year, 2 year. In other words, you have some options. You're not just thrown out. You can pay down that mortgage or pay it off depending on how much life insurance is left.
Okay. So when you say pay it off, how many situations have you run into where people have dealt with a situation like this, and what strategies did you provide for them?
Okay, so I have been doing this full time since 2005, and I have seen both sides of this. I have seen where a wife was left a substantial amount of money and was able to maintain the same lifestyle that she had when her husband was alive. But I have also unfortunately seen more times than not that when the breadwinner is taken away, the wife is left to struggle to try to maintain. Most time, instead of moving up, they have to move out.
Okay, okay. So what is a modified or limited graded life policy, and who should purchase these type of policies?
Okay, so a modified policy is well, let me back up. All policy have a 2-year contingency plan.
And what is that?
And that is that the insurance company reserved the right to make sure that you was healthy at the time of that application, and that the insurance agent wrote down everything and nothing was missed in the MIB, and that's the Medical Information Bureau. We all have it. So let's say I write a $100,000 policy on you tonight, and you die tonight. Well, the insurance company reserved the right to make sure that we told the truth on the application and that underwriting didn't miss anything. If we told the truth and everything check out, that $100,000 will be paid to the beneficiary. Now, a modified policy means we acknowledge you have some type of health challenges. So most time you have to live 2 years. But in the event that you don't, every penny that you put into that policy is given to your beneficiary, plus a good rate of interest. Now, the danger of some of this modified and limited graded policies that I run across is people sit up and they watch the late night TV, those television commercials.
Infomercials.
Yeah, infomercials. And then the problem with that, most of them, if they stop the television and really look at it, it says on there it's modified or 2-year limited graded. So if you have minor health challenges, why would you want to be put in that? Because there are some people that have died while having that little policy like that. And when they get to the funeral home or they call the insurance company, they only going to receive the rate of return, with the return of premium. That means what they paid into it.
Okay.
So we've had some people that I know of that were in those policies and died and had diabetes. I could have put them in the first day coverage, meaning their family would have got the 10, the 25, the 35,000, 50,000, whatever the face value was.
Okay, so why do you believe folks should use extreme caution when replacing their life policies for a different one?
Oh, good question. Because all policies are paid out after 2 years. Even if the person commits suicide, it must be paid out. And so if you have a policy that's over 2 years old, I want people to use extreme caution and have a good reason why you're replacing that policy. I help people that's not even my client. Somebody tell them to replace the policy. No, you don't want to replace that policy and you're not knowing what you're doing, because I come in there and I replace your policy. Remember, there's a 2-year contingency. So I come in there to replace your policy, most times just to get a commission. You die within 6 months. The insurance company find out later, talking to the doctor, rechecking the MIB board, oh, something was missed. This person is not as healthy as we thought. Guess what? I just cheated your family out of whatever that face amount was, because all they're going to get is the return of premium, what you paid into it.
Okay. Now, life insurance products can be used for much more than paying for a funeral. What else could they be used for?
Let me just say this. A lot of times I say life insurance, and most of us, the first thing comes to our mind is, precious Lord, take my hand. Near the cross, my God, to thee. Oh, I'm going to be sitting somewhere listening for my name. We have the mindset that is only for homegoing services. Not so. You can use life insurance for retirement. Life insurance, God forbid that something comes down. Let me tell you this. The likelihood of you having a stroke or a heart attack and lingering on for months or even years due to the improvement of the health industry, healthcare, is far greater than you just dying instantly. So they have policy with living benefits where you could take advantage of that while you're still very much alive. Then there's college funds for your children. Those are life insurance policy. A lot of people don't realize on their job, all their benefits, they are life insurance products.
So you're telling me that when a person works for a corporation, say like Google, Facebook, LinkedIn, these policies are defined in the manner in which you're talking about?
Yes, it's life insurance products. Your 401k is managed. That's a life insurance product. Your annuities, your IRAs, the 403bs, those are all life insurance products.
I personally never knew that. That's very interesting in finding out. So Why is it that you want to promote life insurance as one of the greatest tools for creating generational wealth?
Because I feel like the life insurance have been a mystery to a lot of people,
In what way?
both in terms of the benefits, of course, the money, and also in a career in it. Life insurance is a career that a lot of people don't understand or don't even know that it's a good career, a good industry to be in, a good business to be in.
Okay.
One thing, you helping people. My greatest thing is the reason why I love the life insurance business is I find that there's so many people that have bought the wrong thing, that have had policy that wasn't paid out because they didn't understand what they was purchasing because they wasn't educated. My biggest thing is I'm going to educate people on the life insurance industry. So when they present a claim, a death claim, or they want to borrow some money, or they want to use it for their retirement, I don't want my people, that my clients, pushing buttons. But more importantly, I want them to be educated that when I ask them what they have, they could tell me exactly what kind of policy they have. Now, a lot of time when I ask folks, well, what kind of policy you have? They say, I don't know. That's the wrong answer.
Absolutely. So, tell me something. Give me an example of how you educated someone who was in a dilemma and you reassured them this would be the best life insurance policy to acquire as a client.
Well, sometimes I sit down with people and they have spoken with other agents, which is fine, and they'll tell me, well, this policy is better for me because it's cheaper, and I love those type policies when they say cheaper, and not just show them how maybe this policy going to terminate in 5 years, and
Okay.
if you 70, you're gonna be 75. Or sometimes I tell them this policy is going to terminate at age 90. At 90, what you going to do? Chances of you getting that policy, a new policy, at 90 is not going to probably happen.
And how often do you educate people? Do you do workshops? Where could people contact you or engage with you personally for an appointment in the future to learn and become, more familiar with the terms that you were talking about today in life insurances?
Well, I love doing speaking engagements in churches, women's groups, any group. I love speaking engagements. But I love doing the one-on-ones, just really diving in and educating people. I love doing policy review. Doesn't mean all the time. I do a lot of policy review, and I don't get paid for it. I feel real strong about it because it's one thing about it. You don't have to be scared to do a policy review with me because I'm not going to be talking about replacing that policy if it's a good policy. If it's 2 years old, in my mind, it's good already. Now, sometimes people say, well, this policy is too expensive. I don't need this. Then we're going to do something else with that policy. But we're not going to just cancel that policy out.
Okay. So, Sheila, please let my viewers know where they can reach you at so they can become more educated.
Sure. I give out my cell number. It's 707-853-6145. Also, all you Facebook fans, hit me up on Sheila L. Tyson. Like my page.
Well, Sheila, I want to thank you for not only coming on the show, but for educating the viewers of the Close the Deal show more on life insurance strategies. Thank you for coming on.
Thank you for having me.
Absolutely. Before we close this deal, Urban Financial Service Coalition will be having its first annual development series, Business Ownership 101 and Your Business Plan, Saturday, May 18, 2019 at 10:30 a.m. to 1:30 p.m. Location is at Wells Fargo Connection Center, which is 1755 Grant Avenue in Concord, California. So remember, if you are trying to start your own business or you've been sitting on the couch for a long time trying to figure out how to get your business started, Urban Financial Service Coalition is having its first annual professional development series on business ownership 101 in your business plan. And the address is Wells Fargo Connection Center, 1755 Grant Avenue in Concord, California. So before we close this deal, if you have suggestions, questions, or even want to apply to be a guest on the Close the Deal show, please contact me at www.theclosethedealshow.com. San Francisco Bay Area viewers, you can find us every Monday night at 8:30 p.m. on cable Comcast channel 29. Live shows every Wednesday on channel 76 on BAVC. Worldwide, you can find the Close the Deal show on all social media. Please subscribe, like, and comment on your favorite episode. Take good care, everyone. Don't forget and find the right connection and close the right deal, because we're going to level up.
She don't ever whine to me.